guys, I just wanted to express some gratitude to Fred for inviting me into his server. It's truly amazing what he's accomplished, not only in terms of trading, but bringing together a community that has a mutual interest to improve their lives through crypto investing and trading. So I don't take the opportunity for granted, and I just wanted to create a private video for the server for a long that I'm looking to take as appreciation. So the coin I'm looking at right now for a major swing long is going to be CRV. If you look at the all-time high, this thing was $7, and we're sitting way down here at 30 cents. So there's a lot of upside. Now, my approach to trading is to basically open up the lens to the high time frame and then work down from there. So that way you get multi-time frame perspective and you don't miss anything before you enter a trade. So starting with the weekly, there was a ton of engineered liquidity at the lows that got taken out here. I believe this was a liquidation wick. There's rumors the founder was liquidating someone that had a $40 million position. I'm not going to speculate or theorize conspiracy theory about what it is, but point is there was a major liquidity event at the lows. So that external low got taken out, and in the weekly profile, typically when you take out a major external low, you're looking to draw into the most obvious weekly imbalance. So this right here was a sell side inefficiency, leaving a huge imbalance between these three candles. So this would be the next weekly target. So then dropping time frame to daily, we're looking at the local price action here. So on the daily, we also created relatively equal lows here that got taken out by this candle, forming a bit of an order block. And the reason I'm calling this the order block, you could call it all three candles just because you had three consecutive down candles. So this whole area here is technically an order block, but the sensitive part would be the last candle on the drop that took out the lows and then displaced higher, shifting structure. So in the range, your box setup is raid, shift, pull back into deep value, which would be from this low to this high. Deep value is pretty much going to be between the 618 and 786 fib. So this cluster right here, which we tagged with that wick, and then pushed up. So based on this profile, we rebalanced this daily candle in the discount of this dealing range. So now we're targeting the daily external high now that we've rebalanced the daily. So this is our draw on the daily, and then we drop it one more time frame just to get a tighter feel on where this is going to go next. So here's your 4 hour. If you zoom out, this was the 4 hour dealing range from that low to that high. This is your deepest 4 hour imbalance within the dealing range in discount. So you could see it was rebalanced here. Based on that information, your 4 hour internal rebalance. So now we're targeting the 4 hour external high up here. So basically all three of the larger time frames are suggesting higher. And I like to make sure that all time frames are aligned before taking a long. So daily and 4 hour and the weekly all pointing up. Now here's what I see in the 4 hour range and how to get in the trade. Your last important time frame is going to be the 15-minute, dropping from the 4 hour to look for an entry in discount. So this is our 4 hour dealing range here to here. And if you just use premium discount fib, anything below equilibrium, so this is premium in the green box, and then gray is going to be discount. Equilibrium is the midpoint, so that would be fair value within the range. You're looking for structure and targets under equilibrium, which is going to be here in the gray zone. So what I see within the discount of the dealing range, the current 4 hour dealing range, is there was established structure here on the sell side of the curve. So you could see these wicks came in, they started to develop microstructure. On the buy side of the curve, once the low was in and the 4-hour draw was complete, you could see the retest, it inverted it as resistance until it broke above with pretty good displacement, came back, and then just did a very light touch over here. What you'll find, a lot of these algorithmically traded coins, and CRV is one of them, is they like to engineer liquidity in a zone before leaving it. So essentially the backtest of this structure forms a liquidity zone. So everyone who got in here, they gave enough time for participants to jump in the trade here on low time frame. So a lot of liquidity got committed in this zone. Before leaving the zone, usually they're not going to leave this much liquidity behind. So what I'm looking for at this moment is a pullback into discount within the dealing range to take this engineered liquidity, reconfirm with a solid backtest that structure, and then leave the zone with a pretty good expansion targeting the 4-hour external high. So I'll show you this in a little more detail, the way I view dealing ranges. So even before we get into that, I'll just go into the daily and show you my core assets, why I'm confident this is going to be it for the bottom. So I always plot in the beginning where the composite volume is traded, and you could see a high volume node right down here with a concentration in that one bar on the histogram, this one right here. This is your highest traded volume within the entire chart, going back to the day the coin was launched. And you could see with this green dotted line, that's your point of control. What you want the price action to do is reclaim the point of control before exiting a zone. So usually when it's inside the high volume node, it's going to chop and it's going to target stops on both sides until buyers get confident and there's a breakout retest of this high volume node. So what I'm waiting for is that final pullback in to take the engineered liquidity, and then I'm assuming the next test, because we've chopped enough in the zone, that larger wallets and whales have already had enough time to accumulate, and then we'll probably leave the zone. So here you could see we're just basically in an accumulation zone. And then this is going to be the 4-hour raid of this engineered liquidity I'm looking for. Zoomed out, there's a ton of failure swings within the range to target. Even on the weekly, you could see these highs. These are all liquidity pools to fuel the move up into the main target, which is a daily liquidity pool. Right here, these 3 pivots. So that's the, I guess that's my overall high time frame point of view. And then if you go into the daily one more time, this is what I see on the daily, which is very telling. So a lot of you guys know I trade MMXM. It's just basically consolidation zones into expansion, consolidate, expansion until it hits a high time frame target. That builds the sell side, and then you flip into the buy side of the curve. Sorry, that builds the buy side, and then you flip into the buy side of the curve. The idea is all these consolidative zones have created liquidity points to target for the move up once you've reclaimed that high volume node, which we're doing right now. So at this point, the buy program is activated. Below these lows, you had order pairing. So I guess resting bids would be waiting here, a passive bid. And then I use my own fibs for the targets. Basically, if the -2 to 2.5 align with a major liquidity pool, that is going to be a target zone. And here, the -4, that's my secondary target. And the max projection is usually the -5, which is going to target the original consolidation. So even the 4-hour structure, the daily structure on this MMXM is hinting at more up on this than down. If we drop the time frame, price is fractal. So you get the same program. What you want to see is the same buy program on lower time frames. When MMXMs align on multiple time frames, they tend to be positive EV. So you have a better chance that your trade on a long side is going to play out. In this case, this high right here took out that high. You had order pairing and then shorts filled, pushing down into create new consolidative zones until you rebalance the 4-hour here in discount within the dealing range. So dealing range is defined by this swing low that took out a previous low and this swing high that took out a previous high. So that's our dealing range from here to here. And you could see when price drew into discount, hitting that 4-hour target, it started the buy program, now targeting the top of the dealing range or somewhere in premium. So now we're targeting up here, and that's how I pretty much use dealing range. Within this 4-hour market maker model, we're on the buy side of the curve. Phase 1 is accumulation. So normally, I mean, not all the time, but some of the time you'll get one final raid of the low before expanding out. In this case, we had it, but it doesn't always happen. So you have a raid, a shift, but we haven't had a pullback into discount within this dealing range. So I'm looking for that pullback into discount. Above equilibrium, so right before discount, we have our structure. We have engineered lows, so we have a pretty strong draw on liquidity here. And what I'm looking for is pretty much a flush of these early front side longs that might be round tripping soon, that didn't take profit at the high. And then from here to expand out to our 4-hour target. So that's pretty much the way I'm sizing up the range. And one more thing to point out within this 4-hour model, I look at it through the lens of phases, right? So phase 1 accumulation, there's less people involved because people are scared within an overall high time frame downtrend. Not everyone's confident that this is a reversal point yet. Even on the intraday, this was biased down until here. So not as many people were in the long yet. Once you shift and expand above this level right here, now people are looking at it more confidently. They're thinking, okay, well, it's shifted structure on the 4-hour, so we're bullish. So there's going to be more buy volume over here. So maybe 40% of the market was buy side here. After the shift, now it's like 80-20, where 80% of the people are going to be on the long side with you. The difference being people that are longing the tops and people that are longing in discount within the dealing range. So the last step within this market maker model is phase 2 reaccumulation. What I'm looking for is these engineered lows to get nuked into my structural target. And this is called the silver bullet entry. It always happens on the phase 2 reaccumulation. And then typically you get the fastest and most explosive expansion out of this, but it has to take out these lows before it does the move. Sometimes it'll slow grind up. That's a less reliable long than one where they take out the lows and then you see absorption or a really strong wick like this one over here. So I'm looking to trade this in two parts. One part is going to be a scalp. It's going to be a scalp from this structure into that 4-hour high, and that's like a 6R trade. Then I have a swing trade that's going to be targeting way higher, around 85 cents, 127, and then higher. But I'll have two trades in here. This is the first one. The second one is going to be using this. It's basically stacked order blocks, just a fancy name. Propulsion block means there's on the low time frame, you could see there's an order block here, one more here. So these stacked order blocks are going to make up a propulsion block, which should act as support, especially around structure. So this was the scalp portion of the trade. The larger long, let me just see, where is my assets? Maybe it's on this one. No, I guess it was on this one. One sec, guys. It's not giga long. There's another one here. Ah, here it is. So this is going to be for the swing long. You'll notice I have a wider stop for the second position, 10.9% versus 4.61. The reason this is 4.61 is I'll be looking for a very tight entry once a low is put in after they take these out. Essentially what I'm looking for with that tight entry one of my images went missing. One sec. Bruh, where did my images go? Yeah, this is pretty much what I'm looking for in the range for the scalp long. So say the engineered liquidity is right here. That's going to be this. I'm looking for a massive drop that's going to be taking out this engineered liquidity. That's going to represent the raid, and then a shift. So something like this, where it shifts above low time frame structure or microstructure that's created. Then a dealing range to be created. Premium discount, basically measuring from the low that got put in to the high from the shift. And I want to see a pullback into discount, or at the minimum equilibrium. And inside of there, I want to see a combination order block breaker or imbalance to behave as structure for you to take the long. And then the entry is only going to be in the part of that structure that's in discount. So even though this top part of the blue area might be an order block, I'm not trying to long that part of the order block because that's still in premium. What I'm trying to long is the discount portion of the order block breaker or imbalance. And the optimal version of this will have a combination of both order block and imbalance, or breaker imbalance, or order block breaker imbalance, basically all of them, right? So that's what I'm looking for over here, and then I'll just basically mark it in. This portion of the trade, which is the swing, this is why I have to go in with a wider stop, 10.9%, because this is going to be a DCA entry, where basically at every level, every key level I've identified, I'm putting a part of my entry in with the majority, with a bit more size at the top, then just very light bids until we get into the deeper part of where I'm trying to enter, where I'm going to be adding size. And I use a risk calculator. Oh, I created a risk calculator. So the idea is $200 I'm risking at the top right here, just so I have exposure at the obvious target. Then I have light entries below that. So these three, what they're doing is they're just ensuring that if price keeps coming down, I'm adding size, but I'm not oversizing at the top side, and that I still have part of my allocation, the more sizable part, at the lower areas where we could get the proper reversal. And then you could see majority of the size is going to come in at the last two bids, which is below this low inside of a deep discount cluster. So once all the liquidity is rated, like maybe they don't target this, but they target the entire range liquidity, then I didn't basically overcommit up here, where I would basically risk a lot more money and get stopped out for more money, but rather I'm getting the majority of my fills down here, where my risk goes from 10.9% down to 5.61 and 3.90. So basically my blended entry is going to be lower, and my unit size is still going to be what I want, but my average entry is going to be lower, and my P&L should be higher whenever I do get the payout. Now, the idea with this calculator, I basically created it in a way where if I change, like if you look here, how many units I'm allowed to purchase based on a $200 risk. If if I raise that to say 2,000, look how the unit size goes up. Now I can buy 64,000 units here. So if I go back to 200, only 6,400. But you can see how that reflects on my P&L as well. So the idea is I don't want to over risk here, because if I get stopped out, my loss is going to be much higher, right? So instead of 200, I'll be losing 2,000, and then my overall risk is 2,800 instead of 1,000 to make whatever the P&L is. So it's important to know before you go into a trade how much you're willing to risk, and then basically size accordingly to what you're willing to risk. So that's pretty much the entry. In terms of targets, ultimately what I'm targeting on this, you have several wave structures. I think I have it on my perp chart. Let me just pull it up here. So you have a 4-hour wave structure I'm trading. It's basically a perfect bat. Very clean. So it's not a perfect bat, but it's very textbook. Targeting up here based on standard deviations. They're going to kind of line up around 36 to 35 cents. Also, there's a 12-hour Gartley that I'm waiting on. So if we do get that entry somewhere around here below this engineered liquidity, I'm looking for a 618 reversal, and then that would line up with the 618 first retrace. So then I would target this Gartley target, which is going to be up at 34. So both of them combined, they kind of line up in the same zone, and that's going to be my wave structure for the scalp. In terms of the larger trade, these are going to be the TPs I'm looking at. TP1, TP2 above that high. I think I have a better version of this over here. No, so I have it on this one. So basically TP1 is going to be the mid of this dealing range. TP2 into these highs. TP3 is going to be in this liquidity zone. TP4 above these highs, basically, or around them. And there's TP5. So I know that this can go a lot higher, but you know, you always keep a runner in case it does. For me, I'm just trying to extract as much as I can out of the trade, and then I'll basically be buying or compounding on dips. Because ultimately your target on the weekly is going to be up at 178, and basically once you get into this zone, there's going to be a bit of a short squeeze going into that imbalance. So this is going to be a really strong swing trade. Again, I want to thank Fred for bringing me into the server, and hope to meet a bunch of you guys on the server and share ideas and grow together. All right guys, enjoy your day. Blessed Sunday.